of a multi-step income statement. So we get a little more detail here than what we previously saw with just what we'll say a regular income statement, or we refer to that sometimes as a single step. This is a multi-step, so we've got a lot more detail and a couple more different categories maybe that you did not see in the first income statement. Multi-step comes into play when you have sales transactions. So you'd see a multi-step for an organization that actually sells something that has a cost of goods sold associated with it. So we first see this with a merchandising business. You'd also see a multi-step with a manufacturing company. Any company that actually has a product that they sell that has a cost associated with it. Now, I'm not saying services don't have costs. It's a little bit different as far as the income statement is concerned. So we start out with your sales figure, revenue, which is similar, but now we're specifically just picking up anything that deals with sales to start off the income statement. So sales or gross sales goes first. Then we take away those contra revenue accounts. So we have sales discounts and sales returns and allowances. We're going to subtract those. They are contra revenues. They hold debit balances where revenues normally hold credit balances. So we'll take those together and subtract them from that sales figure. And that gives me something called net sales. But this gives me the detail of where that comes from and exactly how much those contra revenues are. Right? The next thing is cost of goods sold. This is the cost of that inventory. If we're a merchandise firm, the merchandise inventory. How much did it cost me? Well, in this instance, it cost me $102,000, but we sold it net for $227,800. Gross, it was $234,000. Again, you should expect cost of goods sold to be less than your sales figure. Otherwise, you're not in business for profit, it doesn't look like. So again, cost is what you paid for it. It's the cost of your inventory. Sales is what you sold it for. And again, net sales takes into account those differences for those contra revenues if you extended any discounts or had any returns or allowances during the period. At that point in time, I can get a figure called gross profit. Gross profit is net sales minus cost of goods sold. It's not an account, it's simply a subtotal, just like net income is. That's not an account, but it is an important figure for us to know. Gross profit would be for a merchandising or a manufacturing company as well. Okay, so after gross profit, which again we have not seen on our other income statement, that's new with a multi-step, then we'll take out the rest of our actual operating expenses. So the top part deals specifically with the revenues and expenses or costs related to producing our product or selling our product. Even if you're not a manufacturing company, but you're a merchandiser, you still have a cost. You purchase the items and then you resell them. So there's still some cost associated with the actual sales process. So everything else we'll list under operating expenses. Just like we did before, we'll list these largest to smallest with miscellaneous being last. Okay, we total those up. When we subtract them from gross profit, we get a figure called income from operations. So far, all of the data that we have deals with the actual core business, why we're in business. Let's say we're selling shoes, okay? Or let's see, this is Connie's Confection. So let's say we're selling yummy desserts, okay, of some type, something sweet and good to eat. So that's the main reason I'm in business. That's my core business. So all this information so far has dealt with that. The reason I'm in business, why I'm in business, and the expenses and costs related to being in business, as well as the revenues that we've earned from our core business. But what if you had other items? You may have some other revenues. They don't really relate to your actual reason you're in business. For instance, here we had some rent revenue. We had an extra space in our office complex that wasn't being used, so we rented it out. Or maybe extra storage space or warehouse space, whatever it be. We've rented that. Well, that is not the reason we're in business to rent things. So that's considered other revenue. It's still a revenue, but I want to show it separate from the main reason I'm in business. Same thing for other expenses. We have interest expense listed there. So we're going to put them in their own category if it's not the main focus and the reason we're in business or related to that. So we take those other revenues and add them. We take other expenses and subtract them. If you had several of each, you'd subtotal it. You'd list them in here in this column and subtotal them and then put the total out to the right hand side. But we only had one in each category, so we just went ahead and listed it out here in the totals. All right, when you subtract those from income from operations, you get income before income taxes. Sometimes you'll see this listed as earnings before income taxes. And if you had a very detailed multi-step, if you've ever heard the term EBIT, earnings before interest and taxes. But that's a little upper level, but if you've ever seen that and wondered what it is, there's just a little information. So the only thing left to take care of are those income taxes. So we'd calculate our income tax expense, subtract it, and then now we've reached net income. Don't get overwhelmed with this, it's just greater detail, which is good for the user of the financial statement. Now I have a lot more detail of what exactly happened, where did my revenue and expense come from, and was it main revenue, was it extra, was it other, not in the core or the reason for my business. So this just gives me a lot more detail. And again, the top part is because this is specifically for a merchandising business. Again, and for manufacturing, we would see the same type of detail as this also. Okay, so there you go. Multi-step income statement. New items on there. Sales, gross profit, income from operations, your other, and then finally we get back to that net income figure.